Do not disturb.
Hello, hello, hello. Good afternoon, everybody. My name is Alicia Best. This is my colleague, Adam Matlock. We are your friendly neighborhood tax attorneys at the Lone Star Legal Aid Low Income Taxpayer Clinic. Lone Star Legal Aid is a nonprofit law firm. We provide free legal services to low-income individuals and families, and we serve 72 counties in East and Southeast Texas. Before we get started, I do want to let you know that this presentation is not intended to serve as legal information, and it does not replace legal advice. Contact Lone Star Legal Aid at 1-800-733-8394 or go to www.lonestarlegal.org for more information on legal assistance. We'd also like you to know that Lone Star Legal Aid does not discriminate on the basis of race, color, religion, gender expression, sexual orientation, age, national origin, ancestry, disability, marital status, or military status in any of its activities or operations. So with that being said, we'll go ahead and get started.
Like Alicia was saying, my name is Adam Matlock. We're here again, Lone Star Legal Aid. We're the Low Income Taxpayer Clinic. So we are here, and what we help people out with is cases or controversies before the IRS. So if you've been audited or have a case or tax debt with the IRS, that's typically we help out with for low-income individuals. But today, this is a pointed topic to talk about 2022 tax updates for self-employment taxes. We're going to talk about the 1099-K and the changes that have been made there, and a couple other things that go along with that. So big things today, what are self-employment taxes? 1099-K, what is it? What are the changes that have been made? Estimated tax payments, so who has to pay, how much, how often, how to calculate that stuff, because that's something that's really important for people dealing with self-employment tax and tax issues. Also, a little bit of discussion on tracking expenses, because as much as we like or don't like to pay taxes, there's always business deductions and expenses that you can do to help limit your tax liability. And then some collections alternatives. If we get beyond that, if you end up owing the IRS, some things that you can do to try and help out there if you qualify for them. And then just a little extra on the end, talk about some of the economic impact payment and child tax credit stuff, because that's still relevant and impacts a lot of self-employment people, because a lot of people have families. So that's something that's important as well, plus the mileage change. The IRS changed the official mileage rate. So first thing I want to talk about with self-employment taxes. Self-employment taxes are kind of like if you've worked for a employer before, they do your withholdings. That stuff gets taken right off the top out of your paycheck before you even see it. So you got the whole gross pay, net pay thing. Your take home is always less than what you get paid, because they have all those deductions that are required by your employer. When you're self-employed, you're in charge of paying that stuff yourself. So if you don't pay it, then at the end of the year, you end up getting a big tax bill because you didn't pay your self-employment taxes every quarter. So your self-employment taxes, your estimated tax payments, that covers Social Security and Medicare for your self-employment tax, plus you have your tax rate. So the self-employment tax rate right now is 15.3%. That consists of 12.4% for Social Security and 2.9% for Medicare. And that's something that you have to make sure you budget for and you pay every quarter. And just one easy way that you can pay that. I know a lot of people ask questions, or they may not know where to go, where to log in, how to pay that stuff. What's nice is the IRS actually has an app on your phone now called IRS To Go, and you can go straight on there and you can pay them from there, which is actually a straightforward and simple way to do that. But it's something that's required if you have more than $400 of net earnings for the year. And then it's important also to keep track of your income and expenses. It's super critical to help lower your tax liability at the end of the year. Make sure you keep track of that stuff.
Absolutely. And so along with that, you have to consider what exactly is income. The IRS defines income as earnings from any source derived. So essentially that's anything from work that you do, you know, the paycheck you get every week. If you happen to find a chest of gold in your backyard and you dug it up, the IRS would count that as taxable income. The money you make from your garage sale even. And so that's a bit of a change that we're having this year with the 1099K reporting. A 1099K is a form, it's similar to the 1099 miscellaneous that you would get as an independent contractor, except this refers to money you receive from digital payment apps. So if you're someone that gets money through PayPal, Cash App, maybe Venmo, if you sell on a service like Poshmark or eBay, Mercari, those types of things, that income is now going to be reported. Now, it always was reported, but the threshold was so high that, you know, most people just looking to free up some space in their garage or their closet weren't going to end up getting this form. But that has changed for this year, and we're going to get into that in a little more detail in a bit. Overall, it's really aimed at getting income from people who participate in what we call the gig economy. It's just a term used for a labor market that's characterized by the prevalence of short-term contract or freelance work as opposed to permanent jobs. So again, this could be somebody, you know, selling out of your closet on eBay, your Instacart shoppers, your Uber drivers, your DoorDash delivery people, Favor, TaskRabbit, all those types of things fall into the gig economy.
Yeah, and this was something that was a big change this last year. It was part of the American Rescue Plan last year, going into effect this year. So this is going to impact you whenever you file your taxes for 2022. And the gig economy it's a big thing. It's been a big topic of conversation lately because there's been so much of it, especially over the last 2 or 3 years. And like Alicia was saying, with the rise of Uber and Uber Eats, all these food delivery services, and a lot of those places, they may issue you a 1099, whereas you got a W-2 before. And that's a big differentiator there. W-2, that's not what we're talking about specifically. This is for 1099 income. And with the 1099K, like you were saying, for the digital marketplaces and things like that. So the updates on that, it's big impact for people out in the community participating in the gig economy. So before, it might have been reported from the entity itself. So like it would be reported for eBay, but eBay was like $20,000 threshold, at least here in Texas. It was a really high threshold. And then they lowered that threshold down to $600. So that's a really low reporting requirement. So whereas that might be something that didn't get scrutinized as heavily, or it wasn't reported on the back end, or something that maybe you engaged in like a hobbyist kind of income, resell things here and there, that's why it's so important now, if that's going to get reported to the IRS, that you do a very good job in detailing your expenses to make sure that you can limit your liability as much as possible, because that's going to be a big change year over year starting for this tax year.
Exactly. Okay. So speaking of estimated tax payments, I know we've mentioned that a couple of times thus far, and that's because it's a really, really big deal if you are going to be self-employed. You know, the gift of self-employment is that you get to work when you want, for who you want, and charge what you want. And the curse on the back end is that you're now responsible for paying all of your income taxes. So self-employment taxes are those Medicare and Social Security taxes that normally, if you are a salaried or hourly employee working for someone else, the business pays 50% of those taxes. And then the other 50% gets automatically taken out of your check every week or month. You don't have to think about it until it's time to put those figures into your tax return for the next year. As an entrepreneur, you're responsible for paying those taxes on a quarterly basis throughout the year. The rate is 15.3%. and it's taxed on your net earnings. So the good thing about that is you're actually only being taxed on your profit, not your gross revenue. So your net earnings are your total revenue minus allowable business expenses. And that can include advertising, business mileages, supplies, training and licensing costs, subcontracted labor if you end up having to do that. So again, really, really important for you to keep track of your expenses throughout the year, because that's gonna keep your tax payments accurate. You know, you don't want to be overpaying because you really need that money in your pocket throughout the year. And good record keeping, it's really going to save your life come tax time. If you ever get audited, you want to have those, right? You want to have those receipts and those records on hand. So the quarterly payments are due on the 15th of the month following the end of the quarter. So for example, your first quarter payments for January through March are due April 15th, 2022. I think they extended it to April 18th because I believe the 15th was on a weekend this year. You got a couple extra days. Your second quarter payments for April, May, and June are going to be due July 15th. Third quarter payments will be due September 15th, and then your fourth quarter payments will actually be due next year, January 17th, 2023.
That is correct. So whenever it comes around to figuring up your estimated taxes, and like you're saying, that's the net, that's after your business deductions and everything. And thankfully, it's not over the overall amount. You get to lower that down. That's a good thing. And keeping good business records is totally important for that. So when you figure that up, though, when figuring your estimated tax for the current year, it may be helpful to use your income deductions and credits from the prior year as a starting point, if this is your first year. So if you've not done this before and you just started and you've got a prior year income, you can kind of use that as a baseline for this new year starting out, or you can sit down and you can do your estimate and see what you've got for your cash flow and what you're working with your business expenses and your business itself. And the IRS actually has a form you can use for this. It's called the 1040 ES. And you can use this form to estimate the amount of income you expect to earn for the year. And then if you estimate your earnings too high, you can simply update the 1040 later to try and adjust that and figure out, make sure you're paying the appropriate amount of tax. And like Alicia said, when it comes to your return and refund at the end of the year, the ideal scenario is you want to get as close as to zero earning as possible, like zero that you owe, but also on the refund side. And some people I know do use that and say, okay, well, I'll just overpay and I'll get it back at the end of the year. And that's a possibility. That's always your own money and you can manage it that way. But if you do it where you're as close to zero as possible, then that's more money you have back in your pocket during the year and not having to wait all year long until you get that back in the form of a refund. And the IRS is certainly not quick about getting that back sometimes, especially right now they're significantly backlogged. So it's better and more frugal, better to keep it in your pocket so you can manage your own money instead of waiting till the end of the year to get it back. But that's kind of two different ways of doing things. But that's best thing is just to figure it out and estimate what you're supposed to be paying and pay that amount.
All right. So there's some best practices you want to keep in mind when it comes to keeping your records. I encourage people track daily if you can. At the very least, set a time aside every week to sit down and track out your expenses. Because the thing is, you know, we're all busy. You've got a lot going on. You're trying to run your business, you know, spend time with family and friends, maybe take a vacation. If you wait until weeks and months after the fact, you're going to forget what you spent. So you really want to make sure that you just knock that out ahead of time, get a system in place. If you can, definitely get a separate business bank account and keep all your business transactions in that account. That's another thing that can help. If you have a separate bank account for your business, you know, even if you don't sit down and write out all the receipts, it can at least be helpful to know when you pull that bank statement, you're not going to have to cross out Buffalo Wild Wings with the guys, or, you know, oh, I had to run to Walmart to get some soap. That's actually a personal expense. And it's going to help you, you know, just be accurate in what you're investing into your business. Another thing to note, I know we say mileage and meals can be deductible. That's a big thing that people like about having their own business. However, that only applies to deductible business activities. And please note that simply taking your friends out for bottomless mimosas and, you know, shouting the name of your business does not make the brunch a business activity. And also, alcohol is not a deductible business expense.
Yeah, leaving your card on the table with the tip does not make it a business meal.
Yes, you can't just shout business and turn it into business activity. I wish that was how it worked. That's not how it works, guys. They're talking about, okay, you're taking a client out for lunch to discuss, you know, to do a consultation, business expense. You have to meet your accountant for coffee to give him some documents. Okay, that's a business expense, but, you know, just the purely social stuff, and paying for it with your business card, that's the road to ruin. Please don't do it.
Yeah, if you stop at Starbucks and then while you're there on your phone, you order business equipment on your phone, that doesn't make it a business expense.
Exactly. So you got to be really, really careful with that. You want to make and keep copies of your receipts. We all know the receipt paper is terrible. You know, it fades if you got too much lotion on your hands. So keeping receipts is great, but, you know, 6 months, a year, 2 years later, if you get audited and you want to hand your tax preparer this box of receipts, it's faded. We don't know what's going on. So it's great that you had them.
And don't keep them in your wallet.
Right. But if you don't immediately scan those in, you know, when they're fresh, you're going to lose that information, because unfortunately it just doesn't last long. Along with that business account, you want to make sure you have a separate business email. That's also really helpful, especially if, like me, you order a lot of stuff online. Then it's really easy to just, you know, make sure that receipt goes to that account, and you've got a separate, you know, your order confirmation right there, and you don't have to think about it. There are a few apps that can be helpful. Please know this is not an endorsement at all. It's not a sponsorship. This is simply for informational purposes of, you know, some apps that we've seen that might be helpful. Microsoft Excel and Google Sheets are free. The spreadsheet is simple, but it works. You know, put in the date, the time, the expense, and the cost, and you're good to go. It requires a lot of work on your part up front, but it's foolproof, and most people have access to that. Another one that I like to use is Tiny Scanner. It is free. Basically, you use your smartphone camera to take a picture of a document, and it will automatically, it'll turn it into a PDF. You can email it to yourself. You can upload it to OneDrive, Google Drive, Dropbox, you know, whatever you want. And you've got a copy of that receipt or that document right there in your phone, and in a backup method as well. Biz Expense Tracker is another one that's available on Android and Apple app stores. It does have a fee. I believe it's about $10 or $12. So it's a lower cost. And it's similar to Tiny Scanner, except it has some additional capabilities with saving receipts and categorizing things. And then kind of the Cadillac version of these would be QuickBooks or FreshBooks. Those are all-in-one services that are intended to essentially replace a CPA. They're their own all-in-one software for budgeting, tracking. You export everything to file your taxes. But again, these go into the hundreds of dollars, possibly over $1,000. So it's a big expense up front. The people I know who use it have said it's worth it, and just making things easy for them. But again, may not be affordable for you, so you can look into other things. And then lastly, obviously a personal business attorney, tax preparer, CPA, accountant, you cannot replace the value of having that expertise when building your business up front, and their fees are tax deductible. So if you are able, or just keep that in mind in growing your business, once you have the profit to invest in those kinds of services, it's absolutely worth it to get it off your plate and into the hands of a professional expert.
And also the tax deductible for like the business expense tracking software and things like that too, to manage your business. But that's super important. Like we talked about in the beginning, you got to pay the taxes, but if you can lower that liability with your legitimate actual business expenses and deductions and things like that, that's what lowers that liability on what you actually have to pay. And it can be significant. And that's why sometimes even just a consultation, sometimes you can talk with a CPA or somebody when you're forming a business, can kind of steer you in the right direction for keeping good. There's no replacement for good record keeping, and make sure you have a backup because you don't want to end up having an emergency or something happen. I had a client before that when Hurricane Harvey happened, had a lot of stuff on paper, and the file cabinet ended up getting ruined. But thankfully, she had a computer that was up on a desk that had all the records that she had entered into and kept the spreadsheet. So I was able to save that, and we're able to use that for the IRS for record keeping purposes. But you never know, especially here in Houston with the weather.
Absolutely.
So some other things. So we talked about income, what you have to pay, our tax payments, and we've talked about some business. And this is where we can come into play, or getting a tax accountant if you need one services. We're a low income taxpayer clinic, so that limits the population that we can serve based off up to 250% of the federal poverty guidelines. But sometimes there's things that we can do. For one, if you end up owing the IRS money and you owe them a large sum of money, you can always enter into an installment agreement. And you can do this with or without the help of a tax professional. You can do what's called a short-term installment agreement, where they give you like 6 months where you can just pay it all. You could pay monthly, you could pay all up front, all at once, or you can do a long-term installment agreement, which covers over the course of 72 payments. So they'll take whatever that balance you have is, and they'll divide that by 72, and you'll make your installment agreements for that. Other things that are available or possibly available to qualify for them, and these are based off of your financial situation, are possible currently non-collectible status, where they can take a look at what your assets are and your income versus what your deductions are. And basically, if you end up where you're kind of insolvent, where your expenses are more than your income, you might qualify for non-collectible status, which means that the IRS will pause collections activity. Meaning they're not going to send you a notice every month trying to get you to pay and all these threatening letters that show up. And that can be maintained for basically indefinitely, as long as your financial situation doesn't improve. Now, if you win the lottery, you start making a bunch of money, then the IRS evaluates that every year, and it might put you back into payment status. But that's a good, helpful tool if you get swamped and your bills and everything end up being more than what your income is, if you qualify for that. And they'll do a detailed financial statement with that you have to provide to the IRS, looking at all your expenses, your income, verifying all that stuff. So it's a pretty detailed process, but it is an avenue. And then beyond that is what's called an offer and compromise. And we do this sometimes. It's very difficult to qualify for these, but in the event that your financial situation is that you're not ever going to be able to afford to pay the taxes, a medical emergency, or things that have happened, or decreased earning potential over time, there's a lot of different factors that they look at. But you can basically, the criteria is kind of the same as the currently non-collectible, where you're kind of looking at an insolvency thing, but you can settle the tax debt that you have for a lower amount, which is something that we do semi-frequently. And those things, they take a long time too. The IRS is so backed up. Usually it takes about a year to get an answer. So none of that's not something that's a quick fix, and it's a very kind of a fringe collections alternative, but there are certain things that the IRS has, tools that are available for low-income taxpayers or people who are in financial hardship to where it's not like you have that gigantic weight on your shoulders all the time.
Yep. And so I don't know, and you might have already mentioned this and I just didn't catch it, but I do want to at least reemphasize that IRS tax debt doesn't last forever. You know, there is that statute of limitations. So it's 10 years. It can be extended in certain circumstances. They'll pause it, like if you file bankruptcy or something of that nature. But generally 10 years from when you file the tax return is how long they have to collect on that debt. So it's not something that's going to follow you, you know, forever and ever.
Yeah, I think the best way we kind of like to explain that is a lot of people understand when it comes to like, let's say you have a late payment on your credit card, like 7 years later that falls off your credit report. It's kind of like your tax credit report. After 10 years, it'll fall off and the IRS is no longer going to be able to collect on that. But like Alicia said, it's 10 years from the point that it's assessed. So if you look back, you're like, well, it was 2010 debt, it's 2022 now. Well, if you file a tax return for 2010 and 2013, then it's going to go from that date in 2013 when it was assessed 10 years forward from that. So that's something to just kind of be aware of.
Right. So and now that we've talked about tax debt, I do want to get into some of the tax payments, specifically the economic impact payments. The IRS has shown that there's still, you know, hundreds of thousands of people out there who have not received stimulus payments that they are qualified for. As you all know, we've been through a pandemic with the American Rescue Plan and the CARES Act. The Biden administration did issue some relief directly to taxpayers in the form of direct checks, known as stimulus checks, but formerly the economic impact payment. And there were 3 total payments. In 2020, there were 2 payments of $1,200 per adult and $600 per adult. Along with the first payment of $1,200, if you had children or other dependents, you could have also received an additional $500 for each dependent. On the second payment of $600, it was just $600 per person in the household. So it was the same amount for adults, children, and other dependents on that. They repeated that same pattern in 2021 with the third payment of $1,400 per person in the household. So if you think you may qualify, I advise you to please go ahead and look into that because you could really use that money in your pocket. So the way that you claim it now is by filing a 2020 and or 2021 tax return. It's called the recovery rebate credit on the return. And even if you have tax debt, any portion of your refund that goes to those stimulus payments or that recovery rebate credit is not subject to transfer. So if you had additional refund in those years and you have tax debt, that will be taken, but the stimulus check portion you should still receive. There's also child tax credit payments. So last year, there were 6 months of advanced child tax credit payments of $300 for children under 5, $250 for each child over 5 years old. And if you didn't receive those, you'll claim it as a child tax credit on your 2021 return. Unfortunately, the child tax credit is subject to offset. So if you do have some tax debt or other debt that's being taken from your refund, that will be taken. But of course, again, always look for the resources. If you think you may qualify for our services, please give us a call. And, you know, if we have the staff available, we would love to help you. And if not, we do always provide resources to those folks that we aren't able to represent.
And also going in line with that, when it comes to doing your 2020, 2021 tax return, There's a lot of times in local areas called VITA clinics, volunteer income tax assistance clinics, that will help you if you fall under certain financial guidelines or family sizes and financial guidelines that can help out with tax preparation. If you're feeling lost there, it might be a resource in your area. Those are called VITA clinics, VITA. Super helpful. And the last slide, or the last information we have here, I want to let you know the IRS mileage rate is updated. So beginning on January 1st, 2022, this year, standard mileage rate went to 58.5 cents. So that's up 2.5 cents from the rate for 2021. And 18 cents per mile driven for medical moving purposes or qualified active duty members of the armed forces. And that's up 2 cents from the rate of 2021, and 14 cents per mile driven in service of charitable organizations. And that rate set by statute and remains unchanged. But those are the updates for the mileage rates for those of you who are tracking mileage. Also, I think there's an app thing called Mile IQ. There's a couple other ones out there available on your phone if you're bad about tracking mileage, and mileage can be a big expense for a lot of people. They have apps where you can do that, where you start it when you get in the car, and then whenever you stop, it'll give you a prompt, or you hit the little button, so that way, and you can keep track of your mileage records there. But I think it's pretty much all the information we have today for our estimated tax payment, self-employment tax, all these wonderful tax updates for people who tune in and able to watch this.
Let's see, and do we have any questions from the audience right now? Check.
No questions. All right.
I'm not seeing any at this time. Well, again, I'm Alicia Best with Lone Star Legal Aid. Lovely to meet you. And it's been a pleasure talking with you today. Anything from you, Adam?
No, that's it. But again, this presentation again was intended to serve as legal information, does not replace legal advice. Contact Lone Star Legal Aid 1-800-733-8394, or go to www.lonestarlegal.com.org, for more information on legal assistance. And again, Lone Star Legal Aid does not discriminate on the basis of race, color, religion, gender expression, sexual orientation, age, national origin, ancestry, disability, marital status, military status, or any of its activities or operations. And that's all from the Low Income Taxpayer Clinic from Lone Star Legal Aid. Y'all have a great weekend. Thanks for tuning in.
Thank you.